Hi, good evening, everyone, and thank you for giving me this opportunity for sharing my views on digital banking, past, present, and future. My name is Praveen Khanna, and I'm here on behalf of ScoreMe and Resurgent India. Now, before I actually share what's there with digital banking in the present and what's happening in the future, I thought I'll give you a quick sneak peek on what happened in the past through a personal experience. So this is an experience that I went through in the year 2002. This was the first time when I had applied for a home loan. And there were three broad challenges that I faced. The first challenge was there was no digital platform to disseminate information on loan process and to offer me competitive interest rates from different lenders. So there was no way I could compare across institutions. The process, of course, was manual, it was paper-driven, it was intensive, and there was substantial back and forth between me and the bank. And finally, the lack of communication and the amount of time that it took for me to take that home loan. It took almost more than 60 days for the loan to get processed. And right until the last day, I was not aware if I would be getting the loan check. So I go to the home registration office. My property has been registered, and I'm still searching for the bank chap who is coming on a cycle carrying the check, and I'm quite literally trying to find him. So it was a huge challenge that time, and a very paper-driven, intensive model. Now, if we move towards the future, the story has changed completely. Those times have changed remarkably with the advent of fintechs and the partnership between fintechs and banks and NBFCs. Digital banking and fintech is now quite clearly omnipresent, right from wealth management to insurance, to payments, to RegTech, and quite literally digital lending. That is really taking shape. So one estimate is suggesting that the Indian fintech market is expected to rise from 2.3 lakh crores to almost 8.35 lakh crores by 2026. So clocking an compounded annual growth rate of almost 24.5%. That's the kind of market size that we are seeing on the Indian fintech domain. So we're quite literally living in this digital age. In my view, there have been three phases of financial inclusion in India. The first phase was from 2014 to 2016. That's the time when the Jan Dhan accounts and the payment wallets took off. The second phase was from 2017 to 2021. That was really driven by the advent of UPI. I was reading the latest payment statistics on UPI released recently by the MeitY ministry. And the UPI payments now are at almost 7,400 crores, clocking 100% growth rate over the last couple of years. So that's the kind of substantial growth that you've seen. So what I'm witnessing now is this decade will be about digital lending. And this will be led by neobanks. This will be led by fintechs. This will be led by partnerships between fintechs and banks, and the new model that's emerging on the digital banking space. There are two big themes that are taking shape. Those themes are the account aggregator model, and then there is the open model, the open credit enablement network, which will drive this growth of financial inclusion in India. Of course, it's still a long way off. Only 2% of the outstanding credit in India and lending is still happening through digital means. There is still a substantial gap on MSME credit. That's a big gap that this country still needs to fill. The good news, of course, is that India has the largest number of fintechs after China and US, and the highest adoption rate in terms of fintechs, nearly at 87% as compared to 64% globally. So there's a huge opportunity lying out there for fintechs in India. The other big theme is the mindset of the regulators. That is leading to a big change on the fintech landscape in India. There's huge movement by government towards financial inclusion, and digitization and a positive collaboration between governments and fintechs with the opening up of APIs. So today you have APIs for GSTR, you have APIs for ITR, for MCA. All those have been opened up, making banking and digital lending much more inclusive. And so the government has also recently come out with this model of setting up 75 digital banking units in 75 districts. So the theme going forward is very, very positive from the government standpoint. Now, if I look at India, the one unique phenomena that you witness from an India standpoint is the phygital approach. So banks acquiring customers digitally and then servicing customers physically. At the same time, the reverse is also going to be true in India, acquiring physically and then servicing the customers digitally. That is going to be the theme from an India standpoint. Therefore, digitization will help alleviate costs around acquisition of customers, on credit underwriting, and finally monitoring and collections. Those are the themes that will drive financial inclusion in India. So several new models have emerged. One interesting model, for example, has been BNPL. It cuts across both SME and retail lending. The existing BNPL market today in India is about 3 to 3.5 billion and is expected to grow to about $50 billion by 2026. Research and estimates are suggesting that the number of BNPL users will rise to about 80 to 100 million customers over the next decade, from the 10 to 15 million currently. There are more than now 500 plus digital lending apps in India. So the theme is extremely positive, and then there's a huge momentum that's going ahead. So this is what the new future in digital lending is. The model is called OCEN. It's called Open Credit Enablement Network. It's got 4 stakeholders: the borrowers on one side, the banks on the other side, the protocol that connects the two, and then you have what's called as the loan service providers. That's the new theme that's going to play. So data, they say, is the new oil, and therefore the loan service providers are essentially non-financial institutions who have maximum information about the customers. So for instance, a loan service provider could be an HR tech firm, it could be a Zomato, it could be a Byju's. So if I'm a Byju's, I have all information about potential students, teachers, what are the kind of loans that students are looking at. And so Byju's can use that alternative data, can partner with a bank or an NBFC and offer loans to students. Zomato, I have information about all my delivery agents. I have information about all the restaurants. Which restaurant is doing well, could be looking at expansion projects. Therefore, Zomato will partner with those restaurants, use all that alternative data, work in partnership with a bank or an NBFC, perhaps set up an NBFC of its own, and become this digital lending huge experience, providing huge experience to the customers. So essentially the model is moving away from where we had banks and direct service agents to a model where the loan service applications are becoming agents of the borrowers. That's the new model that we are seeing in the Indian market. So the idea is the model will be cash flow based, it will be B2B, it will be a digital model, and with the ability to lend, monitor, and collect seamlessly. That's going to be the story going forward. So I think we've all seen these kind of numbers. The biggest challenge in my view is the access of credits to SMEs. SMEs contribute about 30% to India's GDP. They're employing about 90% of the workforce in India. And yet the average ticket size of a loan to an SME is only 4 lakhs. In fact, for a micro enterprise, it's only 2 lakhs. So in fact, if you look at India's debt to GDP ratio, it's at 55% versus an emerging market ratio of 135%. And for China, it's even much higher at 170%. So there is huge potential for growth in enabling access to credit. And the only way that's possible is through digital means. So that partnership between fintechs and digital lenders and banks and NBFCs, that's going to be a very, very cohesive partnership going forward. And that's what's going to drive this growth in debt to GDP ratio for India. So just to give you a quick overview of what we do as an entity, we as ScoreMe are essentially parented by a tier 1 merchant investment bank. The bank's name is Resurgent India, and they've been in the debt syndication business for the last 15 odd years. So they've parented ScoreMe since 2017. We are recognized by Startup India, and we essentially provide credit analytics and automation. So the way we do it is we've got solutions and APIs for credit analytics via our offerings around bank statement analysis, GST analysis, ITR analysis, financial statements. We also do legal data analysis. And then we can combine this information and generate a CAM right under 30 minutes, helping more than 200 financial institutions make lending decisions. To give you an example, for instance, an SME approaches a bank for credit. Our APIs will help determine credit eligibility by doing analysis across bank statements. They will combine it with information from GST. They will also combine information from MCA analysis. This makes the job of the underwriting seamless, and our APIs can then combine with the rule engines at financial institutions to generate an in-principle loan approval in under 30 minutes. So that's the objective that we work with. We've also recently implemented some very interesting offerings. One of our offerings is called Simpan. It stands for Simplified Analysis of MSMEs using PAN. So what we basically do here is, basis the consent or the non-consent, we do analysis around income tax returns, GST analysis, EPFO analysis, MCA analysis for potential borrowers. We essentially build a financial, legal, management, and business risk model. And this can then be used for auto-renewal of loans, for enhancing the lending limits. All of those scenarios can play in basis this offering. And finally, what we are now doing is we are moving away from an API-driven approach to an end-to-end digital lending approach. That's the end goal and the objective for us. So our APIs work at the back end, and then we've got an end-to-end digital lending solution at the end. So our idea, essentially, to summarize, is to fuse human intelligence and our banking experience into digital machine learning models. Our idea is to help reduce risk, increase operational efficiency, and enhance transparency in lending decisions. We are truly excited to be partners in digital journeys with banks, NBFCs, and financial institutions, and really help accomplish the goal of financial inclusion and make India a $5 trillion economy. I was speaking to an ex-colleague of mine in US, and they were having challenges in convincing banks and financial institutions in adopting digital means. And my ex-colleague, who's based in the US, was of the view that India could actually lead the way. India has already led the way with Aadhaar-based identity. India has led the way through UPI. So clearly, this decade, in my view, will be about digital lending. And we'd love to be partners in that journey with banks and NBFCs. So that's what I had for today. Thank you. Thank you.